entire crypto market has been nothing but red, oozing price. But what if I told you that in the background, big players are making even bigger moves? Nation states are secretly accumulating Bitcoin, and now some of them are doing it out in the open. Companies are making multi-million-dollar deals, helping bridge the space between real estate and Bitcoin. And more importantly, payment providers like Visa are onboarding thousands, if not millions, of new potential Bitcoin users. But of course, I'm sure all of that is just probably nothing, right? So this is a new segment that David and I are going to do weekly at 1% BTC, where we bring you the biggest macro news events in the Bitcoin space. Quick disclaimer, neither David or myself are financial advisors. We recommend that you speak to a fiduciary before making any financial decisions. So, David, our very first story of today, you might recognize this chappie. His name is Grant Cardone, and he actually runs Cardone Capital. Now, they have just launched a $235 million hybrid fund. So what it basically does is it combines real estate with Bitcoin. Now, the way they're doing that is the fund uses rental income, which from their projections, I understand is going to be around $10 million a year. And they take that rental income and they continuously buy Bitcoin with it through a dollar cost averaging strategy.
Incredible. What an incredible model. I mean, I've been following Grant for years, and he was known for this reality TV show where he was it was a challenge. You know, could they land him in the middle of nowhere, and can he, with no money, no connections, no business, and could he make? How long would it take him to get it to $1 million?
And did he do it?
So he did. He not only made it, he made it a multi-million-dollar business, starting from nothing. So he actually convinced Guy to sleep in his trailer home, and just made connections from scratch. So I have a lot of respect for the man. He had, because he owns such a vast real estate empire. It's very difficult for him to transition into another asset class, especially being a new asset class. It's a kind of
Why is that? Why is that?
Because it's this equity that he owns thousands of properties, and you know it's not very liquid. These assets of property, you know, is a whole, at least a 6-month period where you need to kind of find a buyer, you need to, pay all the taxes and get everything ready for the sale. So with Bitcoin, it's an instantaneous purchase, right?
Yeah.
So,
Gotcha.
I mean, he's famously known for selling his Miami beachfront property for 400 Bitcoin. And people thought he was crazy, so that equated to, at the time, this was back in, I think, August or September of this year, that equated to $43 million that he sold his property for. And so his answer to them, claiming that he was crazy, he said, I sold my prime real estate for prime real estate in cyberspace.
Digital Manhattan, as Michael Saylor calls it.
That's it.
Completely
That's exactly it.
What was I going to say? Yeah, so one of the things I like about this is it kind of overcomes a lot of the problems that traditional Bitcoin treasury companies have. So a lot of Bitcoin treasury companies, what they'll do is they can take out loans against their businesses. So they're basically taking on more debt, and then they use the debt to buy Bitcoin. The hope is that Bitcoin appreciates in value. The price of the company, because the assets on the balance sheet have now gone up in value, the value of the company goes up as well. And so then they can take out another loan and use that to buy more Bitcoin. As I said, the trouble is that's relying solely on debt. What I like about this is it's using purely the income and the revenue that's generated by those properties. And I think this will appeal to a lot of real estate investors out there.
Wow. Excellent.
And so I'm going to take you in a quick flashback for our next slide, David. So this is 2018, flashback. Harvard University, some of the smartest people out there, they said Bitcoin is more likely to be $100 than $100,000. Fast forward to 2025, not only have we spent over 200 days above the $100,000 price bar, we actually went over 25% above that and reached 126,000. So yeah, we're down on the day, But I tell you what, those very smart people from Harvard have kind of changed their tune. So they've doubled down on their Bitcoin ETF investment. Specifically, they've increased it over Q3, according to their 13F filings, by 257%.
Wow.
Now, if you look, it gets even better, because if you look into their 13F filings, as some of the nerds like myself have, what you can see is they've actually increased their holdings to be their biggest investment. IBIT, as in their Bitcoin ETF, it now is bigger than Microsoft, Amazon, and their gold holdings.
Right.
So I'll tell you what, loads of parents worldwide would love if their kids were smart enough to get into Harvard. Well, those smart kids and those people in charge of the endowment believe that Bitcoin has some use case and is worth an investment.
So it's even higher. It's a larger holding than their gold holdings, because I mean they were known for having huge holdings in gold ETFs.
Absolutely. I mean, and they still do, but it's their Bitcoin holdings now by market value now almost double their gold holdings. So while we've seen a dump of almost 25%, 26% over the past month in the Bitcoin price, it looks like Harvard have been accumulating throughout that.
And they've selected IBIT rather than holding the physical asset as well. And that's interesting, that they fully support, as an institution, they support the whole infrastructure and ecosystem of Bitcoin as an ETF.
Well, it just shows the trust that BlackRock has within the industry. It's far easier to convince a board of directors or a number of advisors to sign off on you acquiring an ETF compared to buying Bitcoin. Bitcoin has a load of challenges that, for many, can seem overwhelming at first, such as self-custody, owning your own private keys, your seed phrase, multi-sig, having a hardware wallet, cold wallet. It can seem overwhelming. It's a lot easier to get it across the board to say, hey, we already own a bunch of ETFs, we already own a bunch of stocks, let's just go out there and buy one more. But it's really, really astounding news.
It's another reminder that since January of 2024, when the Bitcoin spot ETF was launched, that totally changed the industry and the really opportunity of kind of adoption for Bitcoin. Because now these big institutions, as you said, they don't have to get board approval. They can treat Bitcoin as like as a share in any other equity, right?
They can. It's really been given that institutional seal of approval from BlackRock within the sort of legacy TradFi space. Then putting their name behind it has basically said to the world, hey, this thing is here to stay. It is an asset. It is an asset class, and we think it has some value. And it's not just the big players at BlackRock and the geeks at Harvard that are coming to this conclusion. The president of Belarus, Lukashenko, has basically floated the idea that they should start to move away from the dollar. Now, that's not a new idea. He's been saying it for a long time. Obviously, he's very tightly aligned with Vladimir Putin. And what they've basically said is they've got all this excess energy. And he's ordered that they actually want to boost their national electricity use by building a number of nuclear power plants. And what he said is, why don't we use any of that excess energy to mine Bitcoin? We can then turn something which is just wasted and could cost us money to produce into an asset which is going to store its value.
Yeah.
So really interesting moves coming out from the different nation states. But take the good with the bad. Beyond mining, Belarus is also preparing to roll out their CBDC, supposedly in late 2026. Now, this is something they've been exploring for a long time. Just wanted to balance out the news. If they do go down the Bitcoin mining route, which I believe they will, it will still be balanced with a very tight authoritarian control of the populace through a CBDC. Now, this is one of the things that blew my mind, and this is maybe why Belarus is floating that idea now. Well, Chain Analysis has released a report about the EU versus Russia crypto holdings over the past year. What they found is that Russia is now outpacing the rest of Europe in terms of crypto adoption. Specifically in this cohort here, the over 10 million cohort. So these are your extremely wealthy oligarchs, aristocrats, big investors, and they're completely dwarfing the European institutional investors. So this doesn't come as a surprise, given the amount of sanctions that have been levied against these oligarchs, against these Russian companies. I think they know where they can store their wealth, where they can move their money to, and how they can actually use certain cryptocurrencies to evade those sanctions. And I think that by making those moves, it's going to continue to help progress crypto, whether we like it or not.
Yeah, they're dominating this space and the adoption curve. But they're creating their own rails, their own system, and they're part of the BRIC countries as well. They're decreasing their dependency on the US dollar as a world reserve currency.
Absolutely. I mean, Russia and China have been accumulating gold like nobody's business. We know that there are immense mining operations in Russia, and we also know that China had a history of being one of the big mining superpowers before they banned it in 2021. It would not surprise me at all whether the Chinese were secretly mining Bitcoin. And the same with the Russians. And I think they'll do anything they can to gradually or suddenly move away from the US dollar.
Yeah. Yeah.
So obviously, bureaucratic Europe, everything takes a while. All the approvals take a long time. But we are starting to see some good news. So this is a headline back in February, which is about the Czech Republic introducing new crypto-friendly laws. Now, bear in mind, this is only about 8 months ago. But already we've progressed from that all the way to the Czech central bank becoming the first central bank in Europe to buy Bitcoin. So even an institution as slow, bureaucratic, and anti-Bitcoin as the European Union is starting to test out ways where they can use digital assets such as Bitcoin.
Mm-hmm. This is massive for being at the first central bank in Europe to do this. They're paving the way for other central banks to follow.
Absolutely. Now, David and I have spoken about game theory, and we're actually going to have a video on that nation-state game theory in the next couple of days. But essentially, it's just think of this like the first domino. Within the past 4 years, Christine Lagarde, who's got a key role at the European Union, has basically said under no circumstance will any central bank within Europe purchase Bitcoin. Well, this act alone has proven her wrong. Now, the question becomes, do you want to be the last one on board when everyone else has bought it once the price has skyrocketed up? And I think that's what's starting to go through the minds of these key players, these central banks.
Yeah.
And you're not just seeing it in central banks. Just last week, we had the news that we spoke about in a couple of episodes ago about Luxembourg's sovereign wealth fund moving 1% of their assets into Bitcoin. And also we've got another news article from Liechtenstein, where they're now launching a state-backed blockchain network. Now, the interesting part about this is one of their partners in this endeavor is Bitcoin Suisse, who is a foundation that actually encourages Bitcoin adoption throughout different countries. So you're starting to see all these little puzzle pieces come together, and hopefully we can get enough of them across the aisle in order to make sure that the EU finally bends the knee and makes Bitcoin happen.
But when you think about the purpose of a central bank to own, like, what is their purpose for their economy, their country? It's currency stability, it's foreign reserves, and it's risk management for the entire nation, right? So if they typically invest in gold, right? They invest in durable, liquid, globally recognized, strategically important assets, right? And if Bitcoin makes a list, even if it's a test case and it's only $1 million worth of Bitcoin, it's a historic first for them to do this.
Really is. I mean, shout out to the Czech central bank for having the confidence to do it, even if they do call it just a test. But $1 million, even though it's very small in the grand scheme of things, sounds like a lot of money to us, but it's very small on the central bank and nation state level. Really, it's like this 1% that Luxembourg have put in. It's an indicator more than anything of where things are going. And on the other hand, we've got some rather negative news that was floating around X this week. So rumors started to circulate that the UAE had banned Bitcoin. I'm happy to report that from what I can tell, they have most certainly not. Residents can still legally hold and trade Bitcoin, but there will be certain rules in place now that will make it slightly harder to transact within it. All that said, there's also word coming out from the rumor mill that the UAE Sovereign Wealth Fund has increased their holdings of IBIT by 230% over Q3. So once again, it seems like I don't think a country, even one as restrictive in many ways as the UAE, would consider an outright ban, because so much of their economy is built up upon this tech and gig industry, where they're looking forward to bring in innovation into the country, bring in those digital workers and the digital economy. And I think doing that, when a lot of people move to their country to have lower capital gains taxes, I think any kind of restrictions there would possibly work against them.
That's an important kind of clarification that you've discovered. I mean, that can really shock the market if it's news of Bitcoin being banned in the UAE. But so let me understand it. So it's just the regulations are becoming a bit more formalized in trading and purchasing Bitcoin.
So it's basically this. So the new central bank law, it's actually already in effect, I should say, but it was the interpretation of the law that spread, the incorrect interpretation of the law that spread around Twitter X like wildfire. So basically, the law now requires licenses for nearly all crypto tools, including self-custody wallets, explorers, and market data sites. So previously, this only applied to certain things like exchanges, etc. But now it's kind of any part of the infrastructure, you need to obtain a license or face a fine of up to 500 million dirhams, which is about 136 million US dollars. So it is dystopian to an extent, some might say, but I would just look at it that they're expanding their oversight beyond just the platforms into protocols and tech providers, and without sort of really coming down in terms of like this is a ban or anything like that. Okay. So can you still buy Bitcoin? Can you still self-custody Bitcoin? Yes, is my understanding. Yeah. Right. Can you still trade in it? Absolutely. It's just that you will need to obtain certain licenses in order to do so. And that's just, I'm guessing, because they want to be sure where the money's going.
Yeah, they're still very crypto friendly. They just, as you said, they just want more oversight. That's all.
That's it. Now, obviously, we're talking about Europe being slow paced. Now, Future is a Swiss company that has basically raised 28 million euros to build Europe's largest strategic Bitcoin treasury company. Now, this is led by Folger Ventures, Nakamoto, who's already a Bitcoin treasury company, and Tobam. I'm not familiar with them, but essentially these three entities have come together. And the interesting part will be is if they can actually pull this off, because having at the moment, in terms of treasury companies, we've seen Europe very much out of the race. But if there's one reason why they might be able to do it, it's because their leadership actually involves this man, which is Adam Back.
Yeah.
So Adam is throwing his full support behind this, and they're really doubling down on trying to progress Europe along the Bitcoin journey. And I got to say, I love the name.
Yeah,
Future Secures. I think that's hopefully it secures Europe's future by doing this.
Agreed. I mean, Adam is a Bitcoin OG as well. I mean, it brings great credibility to Bitcoin treasury.
Really does. Some good news coming out of Japan as well, not so much on the adoption level, but in terms of the way they treat Bitcoin. Definitely a lot better than the news we're getting from the UAE. So Japan is basically, Japan's FSA, I should say, plans to reclassify the crypto assets, including Bitcoin, Ethereum, etc., as financial products. Now, what this means is that the tax that you would therefore have to pay would probably reduce from 55%, which would be like miscellaneous income, down to a 20% flat capital gains tax. So that's pretty much a 60% reduction in taxes. I think that would appeal to the average Japanese person who's been considering investing in cryptocurrency or Bitcoin, but been put off because the tax rate is so high if they ever do sell it, to now be saying, well, 20%, I could probably live with that. So really good news coming out of Japan.
That's better than most countries. Exactly.
Absolutely. Now, this has not been approved yet, but approval could come in 2026, early 2026, as far as I'm aware. Now, David, do you remember last week we spoke about the US increasing its Bitcoin holdings through the seizure of 127,000 Bitcoin?
Yes, yeah.
So that you'll probably find this funny. I put the headline in this just as China because that is what this is all about. So after that, within a week, China have basically come out and accused the US of stealing those 127,000 Bitcoin.
Okay.
So China's cybersecurity agency, so SVERC, alleges that the Bitcoin was connected to one of their citizens, which we know, Chen Ji, and it was a coordinated state-level hacking. So what they're saying is that the US has stolen this Bitcoin. Now, why I found this funny, and I'd love your comment on it, is China is notoriously anti-Bitcoin, at least on the face of it. They've banned Bitcoin multiple times, outright bans multiple times on mining, holding, custodianship, everything you can think of. And yet, two things. Number one, in terms of nation states, as far as we're aware, they're still the second biggest nation. They're still the second biggest holder of Bitcoin at a nation state level with 190,000 Bitcoin. And number two is, why would they care? Think of it this way. I was thinking of it this way. Imagine I said to you, you look out your window and you see me rooting through your bins, and you see me take some rubbish out of your bins and walk away with it. Well, you might report me to the police, but you're probably not going to, because to you, it's something that you don't want to use. You've in fact thrown it out. Well, that's kind of what China did when they've banned Bitcoin. But the fact that they're taking this this action to actually call it out and say almost, hey, we have a claim to this, I find very interesting, because I think the fact that their Bitcoin is now 0.5% less in terms of holdings, or 50% less, is probably weighing on their minds. So the US has probably pulled off a very clever strategic move to increase their holdings by about 65%.
That's massive.
And it puts them far beyond China.
I mean, it's this duality here for China to tell its nation that it's, I mean, at the time when they banned Bitcoin and Bitcoin mining, it crashed the whole market. I mean, I think it dropped like within a few days about over 30%. I think if I'm correct. And so you saw a huge outflow of Bitcoin miners that went to, really, majority went to the US. So it was a whole kind of geopolitical shift from China to the US. But as you said, they're secretly mining Bitcoin. They're secretly acquiring Bitcoin, and they don't want it to be public. So for them to come out publicly and say and accuse the US of stealing this, you're exactly right. I mean, I think that it's absurd, but they're trying to play these two roles here. Very secretive role. But why do you think, here's a question for you, why do you think they're so against their citizens in owning Bitcoin?
Because Bitcoin is the antithesis of everything an authoritarian regime stands for. So with an authoritarian regime, you have to have complete control. And you're seeing that with everything that China's doing. They've got digital IDs, they've got
CBDCs.
extreme CBDCs, they've got extreme capital controls, they've got extreme controls on what you can and cannot invest in. The average Chinese person basically has a couple of options: gold in limited supply, real estate, and their real estate is one of the biggest Ponzi's I've ever seen, or keep it in cash, which is basically melting away. So I think that having something where anyone with internet access could get hold of it, start to store their wealth in there. If any person like myself had a choice between holding on to a currency that they felt was degrading and one that was going up in value, you would start to, as soon as you got that currency, you would start to sell more and more and more of it and accumulate more of the harder currency. And I think that they're fully aware of this. And I think that they will not, or they cannot, publicly open up the doors to it yet,
Right.
if at all. I think that their stance is probably, at best, accumulate in secret, or it will be a outright, we will never go for this, and we will just not sell what we have. Then that's it.
Yeah.
But we'll have to wait and see.
You're exactly right.
Two more quick stories. So first one, Visa has tested a stablecoin payout. So Visa Direct is piloting USDC, which is Circle, which is the second largest stablecoin in the world, but they're testing USDC payouts. So basically they're doing this. Why this is such an important story is just the scope of it. So they're doing this across 195 countries over a real-time payment network. So it's absolutely massive in scope. So it's big for digital creators. So think of creators on platforms like TikTok or Uber drivers or DoorDash. They can now use stablecoin payouts to avoid bank transfer friction. So just go get your stablecoins, pay with those stablecoins. It's really, I think, going to be the first touch point for a lot of these people in understanding just how easy certain cryptocurrencies are to use. And I see them as an onboarding step to get people to start researching cryptocurrencies and actually understand why Bitcoin is different to everything else.
I think you're right. The scope is massive, but how does Visa make money from this? If the use of stable coins, I mean, they can't charge, the Visa can't charge the fees that they were able to with the kind of traditional platform that they provided.
Not sure, to be honest. I think it might be something to do with they will take micro payments from the transactions, or maybe there's a hosting fee or something like that. I'm not quite sure. I'll have to look into that, but really good question. It does bring about the question that if the solution that's being provided is basically near zero, how do you make that into a business?
Yeah, exactly.
Well, unfortunately, I'm not going to be able to. You're not going to like my next set of slides then. Well, you will, but you won't, because I won't be. You'll have the same question for this. Now, this for me is the biggest news story of the week by far. Now, Square, Jack Dorsey's company, has basically enabled 4 million merchants across 8 countries to accept Bitcoin payments via Lightning. Here's the thing, with 0 fees until 2027. So that's far cheaper than credit card fees like 1.5% or 4% that we see from Visa and MasterCard. So merchants can choose between paying in Bitcoin and getting paid in Bitcoin, and receiving fiat, US dollars, or whatever their local currency is, getting paid in fiat and then receiving that in Bitcoin, or fiat to fiat. So the choice of settlement, what they end up with, is completely up to them. And once again, 0 fees until 2027. I think that is a huge onboarding feature to the Bitcoin.
That's huge. Exactly. You're going to see a huge adoption. It's gonna grow exponentially with this.
It is, and it's available both at point of sale software, but as well as online. So yeah, utterly amazing news. Now, what's great, and you'll enjoy this, is they've actually released a live map showing all the merchants that basically accept Bitcoin worldwide. So even though they've launched it to 4 million merchants, these are merchants all the way around the world that have already using or accepting Bitcoin for payment. Now, I just wanted to show you the growth of this since the start of the year. We've basically gone from 14 million to almost 20 million in less than a year. That's almost a 50% increase in 1 year. So these things really do scale.
Wow.
So massive, massive news coming out of there. On that, are there any final thoughts you want to leave our viewers with, David?
It's just so positive. I mean, this is very timely, this video, because the Bitcoin price has dropped to below 95,000. And so even though we see the price, going quite low comparatively to its all-time high, just a few months ago of $126,000, it's very easy to get disheartened. But all these kind of news points were very positive about the metrics do not lie. The performance of this new asset class, the adoption of it is incredibly bullish. And if you have scarcity and you have, the hash rate and the adoption curve just going exponentially, it's bound to continue to go higher.
It is. I mean, what happens when an unstoppable force meets an immovable object is kind of what I think about. And I think this perfectly aligns with our ending, but I'll say it anyway. I think that the reason that David and I wanted to show you this is two things. The first is exactly what David said. When you have these bad weeks, it's good to take a step back and look at what the big picture is. And the second is a lot of people just don't realize what the big players are doing in the background, the seeds that they're sowing and the foundations that they are laying for potentially a completely new financial system where Bitcoin is an extremely valuable asset class. Now, David has said before that it's the only asset in human history where retail, people like you and I, have had the chance or the opportunity to front run institutional. That means right now, why the price is down, even though we're not telling you to go buy Bitcoin, what we're saying is you have the opportunity to go buy Bitcoin where it's almost 20 to 25% down from its all-time high price. And when you see these moves going on by these big players, it might just be worth considering. Because don't forget, most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they act with conviction.
Be a 1%er.
Thanks, guys.
Later. Bye-bye.